preparation of final accounts from incomplete records. When a business's accounting records are incomplete or inadequate, it can be challenging to prepare accurate financial statements. However, it is still possible to estimate the financial position and performance of the business using various accounting techniques. This process is known as the preparing of final accounts from incomplete records. And to this, we shall look into the relevant key points to acquire best of knowledge on the subject matter. So let's now take them one after the other. The first one is statement of affairs method. Statement of affairs method. The statement of affairs method in this instance is commonly used when business opening and closing balance sheets are available, but the complete trading and profit or loss accounts are missing. The type of formula that is applicable to this type of situation is given as assets, given as liabilities plus capital. So another point is single entry system with opening and closing statement. In cases where only opening and closing balances are available, the difference between the two periods can be used to estimate the net profit or loss. This method assumes that changes in capital are due to profit or loss and additional capital introduced or withdrawals made by the owner. And the best formula that is applicable to this is net profit or loss, where we need to minus the closing capital from opening capital. And we also need to plus the additional capital, then we minus drawings. Let me take for example, assuming a particular beginning capital is 40,000 US dollars and the ending capital is 55,000 US dollars, and also additional capital that was introduced during the year is $5,000. Please guys, help me to note in all those figures down. And the owner's drawing are $3,000. To solve this, we need to bring out our net profit formula as I gave earlier, which simply means that we only need to minus the ending capital, that is the $55,000, from the $40,000, which is the beginning capital. Then we have to plus it with the introduced capital. I mean the initial $5,000 that was introduced. Then lastly, we minus it from the owner's drawing. I mean the 3,000 US dollar. So we are going to arrive at $70,000. It is very simple, right? So let me go to the third point, which is conversion method. In the conversion method, the single entry records are converted into double entry formats. This involves reconstructing the trading profit or loss account and preparing a balance sheet based on the available information. So in summary, while preparing final accounts from incomplete records, it involves reconstructing financial statements using available information and various estimation techniques. This method helps to provide insight into the financial performance and position of a business despite incomplete records. There is a need for us to always exercise caution and consider seeking professional advice when using all these methods I may mention in this course for any kind of financial reporting. And to this guys, we've come to the end of the lecture.